Oil today is less a finite resource and more an exercise in recalibrating assumptions. Each headline about a glut is just a cipher revealing just how fast the industry can throw out the old rule book. Domestic rig counts still paint the picture of a sector on pause, but U.S. output continues to break records stubbornly high above 13.65 million barrels per day. No great scramble for high prices, no shortfall. Instead, the world faces surplus. The market is showing just how cold-blooded it can get in the face of excess. On the surface, the resilience of gas rigs up to 128 signals strategic hedging with the industry, adapting to a market that punishes hesitation. WTI holding below $62, Brent just above. Both weighted down not by falling demand, but by relentless supply. Natural gas, by contrast, finds price support from weather and LNG demand, suggesting some pockets of tightening that break with the oil narrative. On the ground, operators like ExxonMobil and Logan Energy keep bolting new capacity to old infrastructure, but with ruthless discipline. CapEx budgets lean out. Technology does the heavy lifting. AI, 4D seismic, blockchain, all sharpening the edge, all shrinking the margin for error. Outside the headlines, the deeper story is one of prediction models failing to keep up. The so-called prophets of depletion from the 70s and 80s never saw hydraulic fracturing or U.S. shale making the global oil surplus possible. They didn't factor in the nimbleness of modern engineering, geology, or the industry's reflex to scale up supply at the faintest whiff of profit. Global supply now outpaces even slow growth demand, with non-OPEC producers like the US, Brazil, Guyana, and Canada crowding the field. That's why today's glut isn't a story of withering consumption, it's a story of models and expectations left behind in the dust. Price volatility is now fueled more by where oil piles up than by if it's needed. Some regions swimming in crude while others scramble for cargo. The paradox is baked in. Here, the lesson never changes. The map is redrawn by those willing to challenge assumptions, leverage tech, and see both overproduction and scarcity as two faces of the same market reality. I'm Mark Roach, and this is FutureWise Energy. Keep your wits about you and your eyes open for what's missed in the consensus.